Hi guys, once again, this is Alfred from BinaryOptionsTutor.com. I've decided to go ahead and introduce another little indicator. This is not an indicator that, not a custom indicator that we uh, invented or modified. In fact, I'm not really sure um, who really made the QQE indicators. QQE is quantitative qualitative estimation. Essentially, this is an RSI indicator which has been smoothed using a Wilder function, and the average trading range is derived by, again, a smoothed out version of a fast and a slow average trading range, and that is also superimposed or muxed over the RSI. The end result is a very smooth, linear version of price action. And if any of that just doesn't make a lick of damn sense to you, don't worry. Just remember the words quantitative, qualitative estimation, and because that's really all you need to remember. That you'll need that for to locate the indicator and pull it up if you choose to install it. Nothing more, nothing less. This is essentially a modified RSI with uh, a slow trend, trailing trend, because of all of the smoothing functionality that you're putting into the uh, formula. You're going to end up with kind of a trailing or a trailing ATR, and also you're going to end up with a lot smooth RSI, and this is generally it'll help filter out a lot of the spikes and noise in the market. This is very similar to in my opinion, I'll just say in my opinion, it's very similar to the algorithm and the engineering that went into. Uh, uh, no one will remember this, but there used to be a Dolby noise reduction, where essentially you're blowing up uh, the zeros and ones. Well, it wasn't zeros and ones then; it was just magnetic tape, but you're blowing up all of the frequencies and applying a smoothness so that you can remove unwanted artifacts, and then you are applying that curve during the playback process. And this is very similar here. But all that aside, what we're really going to be looking for is the fact that this is nonetheless an RSI, and in my opinion, it really helps you to spot the squeeze, which is what we were talking about on the last video. Um, right here, you can see the RSI moving and undulating around 50, which is like our perfect center of the 0 to 100 on the RSI. And you can also see that nice long time frame that we covered on the other video, and you can see the average trading range with being squished down and smoothed out. You can see that it's really just hovering perfectly right here around this 50, and when we finally get that break and that hour closes, you can see that we have that breakout and the market moves up. And that's it. That's really when RSI is above this number, we are going to, if we were to try and use this to be predictive, we're looking to see a breakout in a long position, with conversely, with RSI below this ATR, we're looking for a breakout conversely below. And I'm using the 50 line because this is our perfect center. I've also got a little 25 moving average on here, and we can just say when price action is trading below this 25 moving average, that's indicative to us that we are in a bearish market. another little tool for confirmation, just using the indicators to help us to be objective along with subjective, what we've covered with the price action squeeze in the prior video, another prior video to this one. Over here, we see that breakout pattern after the squeeze, and we got a little confirmation is we are above that 25, the same little simple moving average 25, and squeezes are, to me, just a little easy to spot uh, on these using this QQE indicator. Uh, here, here's another squeeze. See again that pattern of that ATR hovering right there around 50. We make our crossing. Uh, Price action up here is even reflecting a crossing, and there's our little 25 SMAs helping us to say maybe we're still in tight range trading, but maybe we're actually moving over and getting ready for a move and a breakout. And if we were, now that we can locate, thanks to this ATR, this extremely smoothed out ATR line here, there's a little dip there, but we can see a resumption of that ATR line because we're just using this indicator is an indicator. And so it kind of helps you to visualize down here that, yeah, you're probably seeing a squeeze going on, and we could draw ourselves some lines here, maybe lines somewhere here in this area. We've got that same pattern of the wicks and the actual hourly closes, and the hourly starts in this case, and some closes. There's a close there, all hovering in that general area, and getting ready for that squeeze pattern as we, see the market jump out, and that little can of soda gets shaken, and finally it explodes. This is probably a news trade because in this hour we see a giant move up, and again there's that consolidation at the top because the very first thing after all of that aggressive trading is the ball's not just going to fall straight. That ball kind of floats for a while. We see again kind of a resumption once we smooth out the ATRs, those volatility levels to using a fast and slow average. Once we smooth them out, it's a little easier to visualize with this formula, and you can kind of see a small inclination here is the mostly on price action. It would have been as this candle is going down, it's also it's showing you here that we're starting to see a little bit earlier, we're starting to see that incline right there. And this is just the basic settings of the QQE. Again, it's a quantitative, qualitative estimation. It's an estimation of because we're using a lot of smoothing, and when there's not very much data to begin with, because there's not a lot of volatility in this area, and there's not really, after we've had so much dynamic trading here, there's not a lot of volatility in this area either. And that once it's smooth, that's why it looks so flat, and it just looks so level like that. That's why it looks so flat, and it just looks so level right here where we see this squeeze. And all of this squeeze right here is a squeeze around 50. Again, we're around 50. RSI is oversold or overbought somewhere around 30 and 70, or 20 and 80. This is the same. It's just an RSI. It's a modified RSI, but an RSI nonetheless. So if we're looking for squeezes around 50, in theory, maybe we can catch a run once the price action squeeze pattern is over. Maybe we can catch a run and see some price action that can really take us aggressively up. Longer squeezes, same as I mentioned on the other video. I love the longer squeezes, just to quote another Paul Carrick song, How Long. He used to be in a band called Ace, and that was probably his first hit back in 1974. Um, Longer squeezes, probably uh, in general, I won't say probably because this is not something that really I have any probable statistics on. But in general, I like to take a longer squeeze, and you can see the squeeze here. This is probably a news trade, but you know we got a nice bump off of that one, uh, and there's some tight squeezes, but notice this is not a squeeze that's around 50. This line here, this is our 50 line right here on the indicator. Okay, we're already trading in a bearish market because this is an RSI. So anything when we're watching this RSI, which is essentially this right here, this is a modified RSI, but an RSI nonetheless. When we're seeing this and it's trading below the 50, we're already in a bearish market, and we crossed here. See a little uptrend on our chart. Price action, we see a little uptrend, but again, it's a bearish market. You notice how we hit that 25 SMA. The only thing we got on our chart is this simple 25 SMA, and we wicked here at this candle, rejected. We had an aggressive move back down off of that 25 SMA. And if we're just using this indicator as an indicator, we also had that crossing again, and we see this aggressive move pushing down over here on price action. We already have long seen that we've crossed back down. We failed to really aggressively move above that 25 SMA, and there are some one little indicator here, our little 25 SMA, and our trusty QQE RSI here. They're both in agreement that we are just seeing a resumption of the bearish trend that was already built into this market. Some guys really don't like indicators because you're going to see this crossing here, and they're expecting that crossing, and they're ready for the whole world, to change and turn in their favor. But where that crossing is below the 50 line, so we're already in a bearish market, and you're jumping in on a crossing that's yeah, this is RSI passing the volatility, the little sort of volatility index we have going on here with this slow trend line or trailing ATR is really more like what it is. But we're already in the bearish region, and all of the guys that are just purists as far as PA, they're saying, well, after this consolidation, we're just going to see a resumption of the trend, and they're not worried about this false breakout here either. That false breakout, it came even in price action. You can see it on that little wick over the 25, and you can see. But the conventional theory is that there's going to be a resumption of that trend down. Also, we were around the high of the range. The message in the takeaway is the indicators, they don't have to fight PA, nor does PA have to really fight the indicators. They can be used to help you find some confluence between what you're seeing on your chart subjectively, and use a little math to make sure that what you're seeing objectively is there also. And a lot of times you'll pick up an indicator and you're just looking for crossings, but there's also so much more to the indicator as far as helping you to see where is a formulaic estimation of where's the center of that action, and where's a better place, especially if you're going to do breakout trading, where we've had that congestion and then we see that breakout. There's that pattern again, that ultra tight price action squeeze, and there's that breakout. That's a pattern we saw before. Let's go back and see if we can spot another one of these patterns. This is pretty close. This isn't perfect around. This is very close to 50 here. That's kind of a squeeze, and we've already got an inclination. There would have been a little pinch there, is we, made a little aggression. But again, there's that pinch. We're not in a oversold or overbought level on RSI, and after that we see the ATR and we see that RSI turn cross 50, and we're headed uh, in a breakout downward. Not as aggressive, not as straight and aggressive breakout that time, but a kind of smooth, slower move with a little choppy on its way down, but down nonetheless. And that's really all I had to share for today. I'm going to upload this indicator to our site. I'll put a link in the description down below. It's the QQE quantitative qualitative estimation RSI. And I'm not a quant trader. I don't do any high frequency trading. I'm we are at best we're probably automated traders. We just kind of have a different view. This is an hourly chart, so no. While it's called quantitative, don't think you're fin. Uh, I'm not using this in a fashion that um, has anything to do with HFT, but it's just a way using a lot of smoothing techniques to kind of quantify where exactly are we inside of a market cycle. And this tried and true simple moving average 25 is also helping us get there. I'm using 25 on this SMA because it's a square, and I love to use perfect squares. If you've been watching a lot of my stuff, you'll notice a lot of time I'm always trying to pull in perfect squares. I also know a lot of guys are looking at what's going to happen around the 50 or the 100 SMA, and in between 0 to 50 there's 25. So again, I'm just trying to use simple formulas to find that center of the universe, and if I'm going to break out trade, then I want to be somewhere within that center of the universe. I want the dynamics to be on my side, low volatility that breaks out into high volatility, a very volatile pattern. That's all that I have for today. If we've helped you, please help us like, share, comment, subscribe. And I want to thank everyone for taking the time to listen to this. Wishing you all the best of luck, best of success. Watch the markets very closely. Be observant. Be aware of your surroundings. And I believe you'll do just fine. Thanks a lot. Once again, this is Alfred from Binary Options Tutor.com.